Ladies and gentlemen, please welcome Oliver Velez, inaugural keynote speaker of the First Traders Expo, international best-selling author, world-renowned trader, advisor, and entrepreneur is back at the show after a 7-year hiatus, representing a rare opportunity to meet one of the most sought-after speakers and teachers on the subject of trading the financial markets for a living. In 1999, Dow Jones dubbed him the Messiah of trading. Oliver, thanks so much for being here today.
Thank you for having me once again. And traders, thanks again for joining what I consider to be or hope to be another valuable presentation for you. I want to thank the Money Show for having me on board once again. Today, we are going to talk about location as it relates to your trading. Now, I know that some people who are familiar with areas of business like the real estate market, they understand that location is extraordinarily important, and it's one of the fundamental principles to success when it comes to real estate. I heard a saying many years ago that still continues to ring true in the real estate world, that the three ways to make money is location, location, location. Well, what a lot of people don't realize is that for the most part, that exists and is certainly the case in the financial markets as well. All financial markets are relatively the same. They're driven by the very same things. They're driven by human nature. They're driven by fear, greed, and uncertainty. And it doesn't matter whether you are dealing with the Forex market, the stock market, the real estate market, the options market, the Bitcoin market, the cryptocurrency market. It really doesn't make a difference as long as the same drivers are behind the market, and all markets are driven by the same thing. So we can use the real estate market, and knowing that location is so important, to actually apply that principle to the stock market and any other financial market. Location in some cases is actually more important than the item or the tactic or the strategy that you're playing. I'm going to show you and demonstrate today that if you get the location right, a lot of other things just naturally fall into place. But the problem is that most people, aside from not having a method, aside from not having a tactic, aside from not having a very well developed, detailed plan, they have no concept of location either. But before the end of this presentation, you're going to know precisely how to incorporate location into your overall trading. So, I am actually not going to spend a great deal of time introducing myself. The vast majority of people know who I am, but if you don't, very quickly, I've been in this industry a long time. Placed my first trade in 1981. I have to do this for the benefit of those who are just experiencing me for the very first time here. I became a professional trader on Wall Street. December 6th of 1986 was my first foray into the professional world of trading. I spent a great 8-year period establishing my name, establishing my history, and a little bit of notoriety on the street or what have you. That led me to making a bold step 8 years into my career, which is to go form my own advisory firm, my own money management firm off of Wall Street. It wasn't the easiest thing to do, but I did it. It was scary, September of 1994. And to make a long story short, that company went on over 12 years to be one of the most recognized companies in the industry. In fact, Barron's in 1998 ranked me and my first company as being one of the number one companies in America to go to if you wanted to know how to handle yourself or wanted to be advised on handling yourself in the markets professionally. The Dow Jones organization dubbed me the Messiah of trading in 1999. This organization, all the way back in the year 2000, made me the face of the industry by giving me the honor of speaking as the keynote speaker to the first International Traders Expo, um, for the entire industry. I was given that honor a second time in 2000 and a third time this year as well. I'm the author of 5 international best-selling books on the topic of trading in 5 different languages: English, Spanish, Mandarin, Japanese, and German as well. These 5 books sell more copies collectively than almost all of your trading books in the markets today. That is not by mistake, traders. I still continue to run one of the largest trading organizations in the world. We have over 10,000 traders in our organization and that span over 93 different countries, more or less. And I continue to advise and speak for financial organizations globally. So that is who I am. I do want you to follow me on my YouTube channel. I spend a great deal of time every single day making sure that there is some piece of content that is released to you that goes a long way toward helping you take another step toward that goal that all of us want, which is ultimate market sophistication and mastery. So every single day you're going to receive something of value that will help you achieve that goal. It's one of the fastest YouTube channels in this industry, and certainly I'm biased, but it's one of the most valuable. Test it out, subscribe, turn notifications on, and don't miss a single piece of content. Okay, guys, let's get into the topic today: location. Location, location, location. That's what it's all about. In order to apply this simple but powerful concept to your trading, we're going to need a few things, a few basic things. We're going to need a $50 to $100,000 account. I'm constantly telling traders, look, the number one reason that most businesses throughout the world fail is because they're undercapitalized. Trading is a business, it's not a hobby, it's not a pastime, it's not a game. It's a business, and you're supposed to approach it like any other business. In fact, more seriously than any other business. You can't be undercapitalized. You can't show up to a gunfight with a knife and expect to win. It's not going to work. So if you're operating with an inadequate amount of money, you're guaranteed pretty much to lose. There's just no guarantee. In fact, a small amount of money will force you to trade incorrectly, building incorrect mistakes. You'll sell when you're not supposed to sell. You'll stay longer when you're not supposed to stay longer just because the size of your account is influencing your decision and not sound practice. But I take care of that. I make sure every single one of my traders are funded by with at least $50,000, preferably $100,000, and I do that with my own capital. All right, we'll talk about that later. We're going to need some charts. We're going to need a 20-period moving average on the chart. We're going to need a 200-period simple moving average on the chart. I had a very valuable talk on the 5 or the 4 key moving averages that I like all of my traders to utilize. These are a few of the 2 of them: the 20-period moving average, the 200-period moving average. We want to grab the stock or the item's prior day's close. All of this is going to come together. And I want to grab yesterday or the prior day's late day price range. I need all of these items to start putting together the proper location. Now, I'm going to actually go to charts right now immediately. I'm going to go to my trading platform and we're going to look at market activity that occurred today. All right. I'm not going to go in the past. I'm not cherry picking. We're just going to look at stocks today so that with today's activity, I can show you how my traders are trained to trade specifically off the open, utilizing the concept of location with these items. Get the location right, and a lot of the rest of your trade falls into place. So let's do that right now. And I'm hoping that this works. Okay. Now, what you should be seeing right now, and someone please tell me if that's not the case, but what you should be seeing right now is my full platform. It is still live. It is still actually running on post market data here. Now, I want to take this chart, our main chart, I want to expand this a bit. All right. And make this chart a little larger for us to see. Now, we can, and I have Apple up here. We can start with Apple. I'm going to go to today's opening period. Now, what you're looking at, let me grab a pen here. What you're looking at is you're looking at a portion of, or the latter part of yesterday's data, which is here. Okay. And you're looking at this morning's open, and from the open. Now, what I want to do, I'm going to change the color of this. I want to start off with us identifying the specific items we need to come up with the proper location. Now, my traders are taught to do this before the market opens. They're going to first grab the 20-period moving average. That 20-period moving average is a simple moving average, and that's that blue line right there. This is before today's opening price. We're going to also grab the 200-period moving average. So item one is the 20-period moving average. Item two is the 200-period moving average. We're going to grab item number three, yesterday's or the prior day's closing price. That's that. I'm not quite sure if you can see it on your screen, but this dash line represents, this green dash line here represents where Apple closed for trading the day before. This is item number three. So we've got the 20-period moving average, we have the 200-period moving average, we have yesterday or the prior day's closing price. We need one other thing. We're going to take the last 45 minutes or so of yesterday's price data. So the last 45 minutes, I don't want an hour, I don't want 2 hours. I just want the last 45 minutes or so. All right? So let's say that the last 45 minutes or so is basically this block of data right here. See that block of data right there? Okay, there it is. Now, that's item number four. Now, let's cover the four items again. There's the 20-period moving average. Okay, there's that blue line, that blue moving average. That's the 20, item number one. The 200-period moving average, simple period moving average. That's item number two. Where did the item that you're looking at close? What was its last price yesterday? In this case, Apple, right here. This is the closing price from yesterday. Item number three. Let me section off or block off the last 45 minutes of Apple's data. What was the last 45 minutes of activity? More or less here. I'm going to go to the top of that activity and I'm going to grab the bottom of that activity and create a box. That box, that last 45 minutes of Apple's price data, that box is item number four. Now, including all of the items, I am now going to take the top of all of those items and box it in all the way to the bottom of those items. So number two is the bottom item. The top of my boxed in price data is the top of those items. Now, this is what I call my fabulous four. Okay. I've grabbed four items, the 20, the 200, yesterday's closing price, and yesterday's late day price block or data. This is my fabulous four. So this fabulous four block gets extended into the future, which is today. Now, here's the general guideline. Once you have your fabulous four block in place, and once you've extended that block into the future, now this is before today's market opens. Here's the theory. If Apple opens above this block today, the odds of follow through to the upside are higher than the odds of a movement to the downside. If Apple opens for trading under this block, the odds of follow through to the downside are higher than the odds of a movement to the upside. It's not that opposite moves are not possible. We're just talking about what happens more often than not. So above the Fab Four, we're looking to move to the upside. Below the Fab Four, we're looking to flurry to the downside. All right. Okay, so we've got our fabulous four block in place. As you can clearly see, you can clearly see that Apple opens for trading under the Fab 4. This tells us that the best trades will tend to be to the downside. Your best option is to short Apple. The $64,000 question is, when do you strike? Do you just jump in right away? And the answer is no. We now have a directional bias. The stock opened under the Fab 4. We have a directional bias, but we certainly need to know specifically now when to strike. So there are two ways to strike. You can wait. We need to wait. I'm looking at a 2-minute chart, and you can use a variety of other time frames as well. I suggest for short-term oriented trading off the open, we're going to focus predominantly on a 2-minute chart where every bar represents 2 minutes of trading. So we're going to let the first 2 minutes of trading go by. If the first 2-minute bar is red, that's when we know we have a match. Now, let me explain the concept of what a match is. A match is when the color of the first bar of the morning, the first bar of the day, matches the location. So when you are under the Fab 4, you are in red territory. When you are above the Fab 4, you are in green territory. So when Apple opens under the Fab 4, we want to see a color match. We know we're in red territory under, but will the first bar also confirm that it is matching its location? We get a red bar. So Apple matches its location. All right. Now let's clear this again. Let's do this again. There's a value in repeating these things. Here is our fabulous 4 block. Underneath the fabulous 4, we have a bias to the downside. Above the fabulous 4, we have a bias to the upside. Where will Apple open? It was indicated to gap down today. The odds are it's going to open below the Fab 4. In fact, it does open below the Fab 4, but that's not enough. Just starting its day under the fabulous 4 is not enough. We need the first bar to actually match, to give us that confirming matching color red. And then all we have to do is short below or enter below the first bar. So any subsequent bar that breaks the low of the first bar is our entry. Boom! We're going to protect ourselves above the first bar predominantly. So we're going to risk 1 bar. There are exceptions to this. I hope I get to that today. But right now, we're going to take the position of, once again, once we get the match, we're just going to enter below the matching bar. We're going to protect ourselves with a stop above the high of bar 1. And Apple produces that profitable sound. Now, that's the way we strike in the proper location. That's the first way we strike in the proper location. There is another way to strike in the proper location, which is to use the color entry method. So this entry method is the confirming color entry method. The next color entry method is the opposing color entry method. So let's assume that you get a stock that is below its Fab 4, like Apple, but it produces the color green, like here. Now we have conflict. We have the stock is in red territory under the Fab 4, but it is producing a bar that is in conflict with its position, a green bar, a strong bar, a bullish bar. So we've got bullishness in negative territory, mismatch. Once the mismatch is removed, boom, we can strike. This is the opposing color entry method. So we can, once the low of a green bar is violated, boom, we can jump inside of the red bar that's violating the green bar with a protective stop above the green bar. Now, I want you to understand both ways that we enter the play. We enter the play under the Fab Four when the confirming color is violated. Boom! We jump into the bar that breaks the low of a red bar. The red bar in this case is confirming the negative position. We protect ourselves above the first bar. If we get a opposite color bar, if we're in negative territory and get a bull bar, a green bar, we will jump into the red bar that breaks or takes away the opposing color. We'll get into the red bar that breaks the low of the green bar, and that's called the color game. Now, if you look very clearly, we have one entry off the confirming color, boom, protection. We have another off the opposing color entry, entry number 2. If you like, here's another green bar, entry number 3, 1, 2, 3, and entry number 4. Now, I want you to understand this is a little bit beyond the scope of this talk, but the further you drop in your play, the lower the odds start becoming of greater success. Now, this should make sense. The beginning has the highest odds, the middle has decent odds. When you are several legs into your play, the odds start changing a bit. Okay. And a turn is usually close. And this is another talk of mine when your 20 period moving average gets separated from the 200. But that's a different talk. Okay. I just want you to understand position or location at this particular point. Now, we can actually go to another. Let's look at Microsoft today. I just want to take a look at some of the most popularly traded stocks. And so everything, as most of people who've watched the market today, everything was down today. So for the most part, we're going to predominantly be looking at things that are under the Fab Four. But I want you to know how to grab this. I want you to know how to grab your items here. Okay. So first, we're going to grab the 20 period moving average. Item number 1. We're going to grab the 200 period moving average. Item number 2. We're going to grab yesterday's closing price. Item number 3. And we're going to take the last 45 minutes of the price data and we're going to envelope that block. Now, including the block of price data, I want to take the highest element of my 4 items, extend that into the future. And I want the lowest item, which looks like the 200 here of the 4 items, extend that into the future. All right. Not the best drawer here, but you get the point. And this becomes our fabulous 4 block. Now, look at Microsoft opens under the fabulous 4. We know that now the best trades are to the downside, but we need the proper entries. So we wait for the first minute bar, the first 2-minute bar to reveal to us, is it going to be a conflict bar, a green bar, or is it going to be a red bar that confirms the location? In this case, it is a red bar. Okay. But we need we need the next bar to break the low. Now, there is quite honestly a little tiny break there. Our protection goes above the high of the first bar. In this case, Microsoft does rally back to the upside, but does not stop us out above that bar in this case. We can add to our play whenever we get the opposing color situation, which is green bar, break the low of the green bar. Green bar, boom, jump into the bar that breaks the low of the green bar. Green bar, boom, jump into the bar that breaks the low of the green bar. Understanding that the lower you get, the odds start to diminish a bit of it working, especially if your 20-period moving average has dropped to the point of being wide from its mother moving average, the 20. And so here you can see the stock even out a little bit, even though there was more movement to the downside later, but you get the point. So this is one of the best ways that we use the concept of location off of the open, knowing what the bias is going to be off the open and waiting for our specific two color scenarios to occur. Now take a look at this. We can take a look. What's another Baba's a popularly a popular stock. This is a beautiful example, guys. Let's grab these four items again. Let's grab that fabulous four. Let's grab the 20-period moving average. Item number one, let's grab the 200-period moving average. Item number two, let's grab yesterday's closing price. Item number three, and let's take the last 45 minutes or so of price data. Let's grab that chunk of price data and block it off. Item number four. Now, in this case, once again, the top of our price box is the upper portion of those four items. What's the lower portion? The 200. We're going to extend that into the future. This becomes our fabulous four block, which should serve as some form of ceiling above us. Now, look at Baba's first bar. It opens under the Fab Four, telling us that the best fluidity is likely to be to the downside. We have to wait for that first bar to give us a go or a not go. So if it's a red bar, it gives us a go. Red in red territory, match. Green in red territory, no match. We do nothing. We got the first bar as a mismatch. We got a green bar instead of a red bar in negative territory. Now, what we immediately do is mark off the low of that green bar. If the very next bar breaks the low, we're going to dive into the red bar that violates the green bar's low. Boom! We don't wait for the second bar to finish trading. We do it at the minute, the nanosecond, the instant that the low is violated, we're in. Where's our protection? Above the high of bar one. We're going to risk one bar on this play for the possibility of many bars. This is one of the key elements to staying in this game, risking one bar but winning 8 bars, risking one bar but winning 12 bars, risking one bar but winning 40 bars, risking one bar but winning 3 bars, risking one bar, one bar, but giving yourself the opportunity to win many bars. Okay. Now, let's go back to this. It's a beautiful example. We're entering into the red bar that breaks the conflict bar off the open in Baba here. We're protecting ourselves above the high of that bar, but we're not done with this yet. We're waiting for the very next color scenario to happen. Here's green, conflict. We're going to mark the low, doesn't break. Here's green. The next bar is green. We're going to mark the low there. We're going to keep marking the low until we get bars that break the green. This bar actually temporarily broke the green. Boom. There's our second entry, and here's another green bar. The next bar breaks the green. Here's another green bar. The next bar breaks the green. You get the point. Now, remember, once your 20 separates fairly wide from its 200, you're in the latter part of that, at least that portion of the trend. You're likely to stall a bit, and the reliability of this approach, simple but powerful approach, starts to break down a little bit. All right, what else can we look at today? Facebook is a very a popular traded stock here. Once again, I apologize for this. We only have uh, most of our examples today on the downside. I like to use the current market's day to show the audience that I am not cherry picking, that I'm not going back in the past and picking something from another year, another month just to fit the presentation. I like to use today's action to show you what you could have done with this action this very day. And I hope you try to do this tomorrow as well. Now, Facebook, very quickly here, we'll try to breeze through this since you understand the concept now. We're going to grab the 20, item one. We're going to grab the 200, item two. We're going to grab yesterday's closing price, item three. We're going to grab the last 45 minutes of Facebook's price data. And we're going to grab the top part of the item, extend, and the bottom part of those four items, extend. We now have our fabulous four block. Stock opens below the fabulous four, giving us its first bar as a red bar. Now, whenever you have a sizable tail, you can use just the body and ignore the tail. Some traders prefer going in below the absolute low. Some traders will choose the body. It's a personal choice, actually. All right. So entry one, possible one, entry 1A is another possibility, whether you use the body or the low. But one thing we do know is this: we are going into Facebook as a short below, we're going into Facebook in bar number two. Okay. Now, we're not finished yet. When does Facebook give us the opposite color bar? Green. Now we mark the low of that green bar off, and boom, we jump into the bar that wipes away that green bar by breaking the low. When does it give us another green bar? Here, we mark the low, but the next bar doesn't break this green bar's low. It gives us a second green bar. Boom, we mark this low. And now this red bar breaks the low, and that's the bar we jump into. We usually have on a trending day anywhere from 2 to 5 entries. On the really long trending, you can get as much as 5 of these going. But a lot of times it's 2 to 3. On the real big trending days, it can be anywhere from 2 to 5. And you can take a look at this and see how many times Facebook gave us green and wiped out, 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 green and wiped out. And while all days are not as fluid as today was to the downside, it doesn't matter. As long as you are protecting yourself for those scenarios in which they don't work, you're only going to always lose, for the most part, one bar. Now, there are a few other things I can quickly show you here. What else? This was a play that some of our traders played this morning. It's really interesting because this one had a series of stop outs. I like to show the ones that don't work as well. All right. Before it started working. So now look, here's your red bar, and you break the low here. If your stop is above this bar, you get stopped out. But there are several re-entries. Now, why would you want to re-enter a stock that stopped you out? If the stop out did not run away from you, meaning that if the stock just nicks you out and then comes right back to give you another signal, I teach my traders that you should give every play a second attempt. Every stopped out play should get a second attempt, especially if you get that second attempt almost right away. So this stop out here in earnest is what immediately followed by a green color being violated. Boom. Here's a brand new trade. Boom. Here's a brand new trade. Boom. Here's a brand new trade. See the green bars? See the green bar? Here's a brand new trade. Boom. Here's a brand new trade. Boom. Doesn't work a tiny bit here. So knowing it's not enough to know the color game. It's extra powerful if you know how to play this color game I teach with the right location and of course in sync with the right flow. Now, I wish I could quickly find, yeah, I can quickly find something. Let's take something like this. Then I was long this, so that's why I know that it's a move to the upside. Now, here is the exact opposite. QID. So let's grab our last four items. This is the last thing I'll show you here. So we're going to grab our 20 period moving average. That's item one. We're going to grab the 200. That's item two. We're going to grab the prior day's closing price. That's item three. Okay. We're going to grab the last 15 minutes or so of the price data. All right. We're going to block that off. Now, the top of this price data is the top portion of the four items, and the bottom price data is the bottom portion. I just want to make sure all my four items are in that box, utilizing the top one and the bottom one. Here's my fabulous four block. Now, if we were under, we're going to think down. We open above the Fab Four, so we're going to think up. And once again, guys, it's just the color game. Boom, red bar. Boom, red bar. Red bar gets taken out. Now, this is a much lower price, so your fluidity is different. But just to give you an example of something moving up versus every example being on the downside, it's the same concept. You're going to go with the flow in the right location, playing the color game appropriately. Guys, I am telling you, it's simple, but it's powerful. And that's the way most things are in life. The simpler they are, potentially the more powerful they are. They are. This game is not complex. We bring complexity to it. This game is not difficult. We bring the difficulty to the game. The market is primitive. It's basic. It moves up, down, sideways, repeat, up, down, sideways, repeat. And it doesn't do anything except those three things, but it feels like it does a million different things. And that is because we are looking at it through the eyes of our own complexity, our own difficulty. We bring our own belief systems. We bring our own lack of discipline. We bring our own lack of a plan, a lack of approach, a lack of concepts to utilize and apply very systematically. We bring luck to the game. We bring guessing to the game. All of these things make this simple game a lot more complex than it really needs to be. And so I have dedicated the last 26 years of my life, 33 years of professional trading, and 26 years to spreading this message of this trading gospel all over the world. And over the last 10 years, I've been traveling the world recruiting traders to fund them. So let me talk to you about that very quickly, if I can, and then I will let you go. Every time I'm given the opportunity to speak, I do my very best to share something that I truly hope will have a lifelong effect on you. And I believe that the concept that I utilize today, that I taught you today, is something that you can use for the rest of your life. You can grab those four items forever, forever. It's a little bit different for the Forex market, a little bit different for the uh, cryptocurrency market, but not much. I'd have to make some small adjustments if you play those markets, but the general concept is solid across all markets. Guys, I fund traders starting them off with 50,000. I teach them every single day of their lives. I give them a $50,000 practice account after teaching them and say, go make $3,000. If you can demonstrate your ability to make $3,000 with what I've taught you, then I will fund your account with my own capital, starting you with 15,000. You will not be responsible for losses. The losses are all mine, right? If we make money together. We will share those gains. I mean, I'm a great guy. I'm a great guy, but I'm not an idiot. This is a business. So you will be brought on as a trader. You will be funded. You can go from 50,000 to 100,000 to a quarter of a million. You can work yourself up the hedge fund ladder, if you will, but you will never have to risk your own family's money. Ever will your money be at risk. Only my money's at risk. In exchange for that, I will share some of the profitability. You trade when you want, where you want, how often you want. It's your business. But check this out. Every single day of your life, I will train you. Every single day of your life, there will be someone there answering your questions, guiding you, making sure you're doing the right thing. You will not be alone. As long as you have my capital, I'm going to be right there making sure you do the right thing. Otherwise, I lose. Now, the program to do this, which is a lifelong program, no expiration, doesn't come absolutely free. I mean, nothing in life worthwhile is, right? There is a cost, but I do want to show you this, right? I want to show you that the cost for something like this, if you open up your own day trading account, you know you need $25,000 to $30,000 at all times in the account. Here you don't. So instead of putting $25,000 or $30,000 into a regular retail account with no guidance, no training, you can put $1,700 up and be trained forever by some of the best traders in America, by one of the premier traders, that's me, in this entire industry every single day of your life. And if you break this $1,700 cost down into a daily cost over 5 years, it's a cup of coffee. Over 3 years, it's a cup of coffee with some change left over. But you get the point. You can lose $1,700 in a trade, in a week, in a month. This is for life. And you never have to risk your own money in the game. Now, there's a cost to train you, there's a cost to educate you, there's a cost to support you, and this helps us do that. But the object is to go into your own trading business. Now, I'm going to drop that price to $1,500. This is, you'll be funded for life and you'll be trained for life forever. And you can grow your $50,000 account to as high as those levels go. All right. And if you sign up or commit to this in the next 48 hours, guys, it's $1,300. Guys, this is a dinner and a very, very nice bottle of wine for an entire family, right? Maybe not for some of you, but you get what I'm saying. The cost for this, instead of doing it on your own, doing it professionally, doing it through an organization that will fund you and train you like Wall Street does it. All right. Very few professionals use their own capital. This is something that the retail market does not truly understand. All right. So I hope that what I've shared to you was of something of value to you. I strongly encourage that you start utilizing my location concept with your trading tomorrow. Test it out. Watch how it works for yourself. Collect the ones that don't work, collect the ones that work. Become familiar with it. This is something that will have a value for you for the rest of your trading life. I want to thank you for coming. I want to thank you for spending your time with me. I do not take your attention for granted. I hope I've delivered something of value. And I also want to thank the Money Show for having me once again. Thank you very much.